Is Aethir the real deal, or just another overhyped VC cash grab that's bound to fade out? Are we looking at life-changing gains here, or are there better AI projects to bet on during this bull run? Stick around because in the next 5 minutes we're breaking it all down, and I'll bust a major myth about Aethir at the end that might surprise you. Hello and welcome back to Crypto Decoder. In this video we're diving deep into Aethir, a new shiny AI crypto project that's got everyone buzzing. We'll go over everything, from what it actually does, to who's behind it, to the risks you need to watch out for. And yeah, you'll get my unbiased take on whether it's worth your time, or a total pass. Plus, stick around for a price prediction. So, what does Aethir actually do? Aethir is a platform that lets you tap into unused GPU power from all over the network, ditching the need for those clunky centralized servers. And what makes it stand out? Well, it's built for serious high-performance tasks like AI, machine learning, and cloud gaming. Now here's where it gets interesting. Aethir is going head-to-head with big players like Render and ATH. In fact, it claims to have 20x more GPUs than Render and 45x more computing power than ATH. That's massive. They've got over 43,000 top-tier GPUs and more than 3,000 NVIDIA H100s, basically providing the kind of muscle that projects of any size need to scale. And if that's not exciting enough, they've recently dropped a $100 million ecosystem fund to fuel the growth of AI and gaming projects. So yeah, a lot's happening in Aethir's world right now, and it looks like the ecosystem is in pretty solid shape. Definitely something to keep an eye on. Team and Tokenomics. Aethir has a fully diluted market cap of $2.2 billion, with only 9% of tokens in circulation. 50% of tokens are allocated to checker nodes and compute providers, which is crucial for the ecosystem's growth. The team holds 12.5%, 7.5% is earmarked for ecosystem development, and 5% goes to advisors. Investors account for 11.5%, with a linear unlock starting in June 2025. The team's tokens are locked until December 2025, which is a major positive, as it ensures reduced selling pressure. While there will be future airdrop batches, around 4%, that could add some sell pressure, it's not expected to be significant. Overall, there's no major concern as the majority of tokens are locked up until the end of the bull run. Okay, let's look at the team. They are fully doxed, which adds a layer of transparency and trust to the project. Aethir's founders, Daniel Wang, Mark Ryden, and Mac Lorden, bring a wealth of diverse experience to the table. Daniel Wang, a blockchain technology expert, has been involved in several blockchain projects. Mark Ryden adds his deep knowledge of AI and cloud computing, while Mac Lorden brings his expertise in gaming and decentralized systems. Aethir is already listed on most major exchanges, with only Binance and Coinbase still missing. Price action. Aethir's price action hasn't been stellar recently, but it's important to note that the entire GPU DePIN sector, including projects like Render and ATH, has seen a dip. However, it looks like Aethir might have bottomed out here. The price range around 45 to 50 cents seems like a potential buying zone, especially if you believe in the long-term growth of the project and the GPU DePIN sector. It's a crucial level to watch for potential upside as the bulls take control. Before diving into price predictions, let's clear up a common myth. There's been a lot of negativity around VC-backed projects like Aethir, especially with low token circulation and high FDV. Many fear these projects will bleed because of it. But here's the reality. Low circulation can actually help drive prices up during a full-blown bull market. We saw it last cycle with projects like Filecoin, Moonriver, and the Sandbox, which pumped to ridiculous valuations. If you look at Filecoin's historical snapshot from 2021 bull run, it hit $180 partly due to its low circulating supply of just 67 million tokens, or 3.35% of the 2 billion total supply. This scarcity drove demand and boosted its price. But since then, its circulating supply has risen nearly 8x to 600 million, now around 30% of the total supply. It's almost impossible for it to reach its previous all-time high from the current $4, as it would have to increase by 45x. So, the low float is a net positive in a bull run, and Aethir could benefit in a similar way. Okay, let's look at price prediction. As always, here are two potential scenarios for Aethir's price. Base case: a 10x return, putting the price at around 52 cents and a market cap of $2.5 billion. This is a conservative estimate, assuming steady growth and the project continuing to gain traction in the GPU DePIN sector. Bull case: a more optimistic 30x return, bringing the price to $1.50 with a market cap of $8 billion. This would rely on significant adoption, major exchange listings, and continued demand for Aethir's decentralized GPU resources, especially in the AI and cloud gaming space. So, is Aethir a winner or a risky play? Be sure to check out these alternatives before making your decision. That's it for today. I'll see you in the next one.